This series of the 2025 50 Faces podcast is supported by Eagle Point Credit Management. Eagle Point Credit Management is a specialist investment manager principally focused on income-oriented credit investments in niche and inefficient markets. Currently, they believe that Eagle Point is the largest investor in CLO equity in the world and one of the largest non-bank lenders focusing on providing financing solutions to credit funds. Eagle Point Credit Management currently has $12 billion in assets under management. This series is supported by Benefit Street Partners. Benefit Street Partners is a leading global alternative credit asset manager offering clients investment solutions across a broad range of complementary credit strategies, including direct lending, special situations, structured credit, high-yield bonds, leveraged loans, and commercial real estate debt and equity. As of December 31st, 2024, BSP Alcentra had $77 billion of assets under management. Our next guest leads the charge on clean growth, carbon limiting technologies, and works with the government's Net Zero Innovation Board. Hear from her about the technology that excites her and why we may be on the cusp of some of the most extraordinary development of our lifetimes. I'm Aoife Devitt, and welcome to the 50 Faces podcast. A podcast committed to revealing the richness and diversity of the world of investment by focusing on its people and their stories. I'm joined today by Beverley Gower-Jones, Managing Partner at the Clean Growth Fund and Chief Executive Officer at Carbon Limiting Technologies. She's an independent member on the government's Net Zero Innovation Board. The board provides strategic oversight of government funding on net zero innovation programs. Welcome, Beverley. Thanks for joining me today.
Thank you too.
Well, let's start a little bit about your background. So we're going to go back to what you studied and how you came to enter the world of investing and finance.
Sure. So I grew up in Suffolk, went to University College Cardiff and studied mining geology and joined Shell when I left university and was fortunate enough to travel the world with them. So after 4 years in the UK, I was posted out to Brunei in Southeast Asia. It's quite near Singapore. And then Egypt, I spent and worked and lived in Cairo. And then I spent 9 years in the Netherlands in Shell's head office and research and technical services centre, looking at kind of interesting debates in terms of whether we were going to be known as the age of communication or the age of pollution. And I was quite kind of strongly on that side of age of pollution. And I thought, okay, well, it's an interesting self-awareness kind of thing. And then I kind of, long story short, I came back to the UK and I joined Kinetic, where I was in their corporate venturing outfit. Our role was kind of building the growth story for Kinetic's IPO. And so that was kind of more moving away from geology. I founded Shell Technology Ventures at Shell, which was looking at spinning startup companies out of Shell's labs. And then we started taking equity stakes in those. And that was because I'd been doing software commercialization and realized that whilst we could commercialize software, hardware was a much different thing because of the incumbent supply chain that you had to be able to work with or work around. And so that kind of transition, if you like, was the thing that moved me from the geology piece to investing in technology commercialization. I left Kinetic after a very successful IPO and founded Carbon Limiting Technologies, which is a consultancy firm, innovation consultancy firm that works with, originally started out working with low carbon entrepreneurs commercializing technology. And then I founded the Clean Growth Fund in 2020 because, there's such a shortage of fund managers and investment willing and able to select the right companies to invest at the Series A stage here in the UK, where they need that money to prove and demonstrate what they say they do on the tin, because they're not software or SaaS or IoT or fintech type things. The kind of generalist VC fund managers tend to shy away. And there was a real opportunity and a need for a specialist climate venture capital fund manager.
Fascinating. Well, before we jump into that, when I hear about someone having a very diverse geographic career, especially Cairo at the early stages, how would you say that influenced your attitude to volatility, maybe to risk, or did it have any influence?
I think you see different markets and you see the way different businesses operate, and it gives you a broader perspective on different business models and how they work, and how different organizations evaluate and manage risk. And that, I suppose, just it helps build up a comprehensive picture, being in different markets and different industries and not just the same perspective for the whole piece. I think that's a really helpful thing. I remember doing a piece of work for a company in India, and the service industry, so the Halliburtons and Schlumbergers of the world in the oil and gas sector, were looking to take value pricing instead of service plus pricing on a particular project, oil field development project. And they were quite keen to do that, but they weren't quite so keen to take that same share of the cost of the risk because they weren't able to evaluate it. They weren't able to understand it. So they kind of went then back to their service plus model. And it was quite interesting to see the different skill sets you need and the different capabilities to be able to properly understand and price risk. And I think that's really critical with the Clean Growth Fund, because having 20 years plus experience as an individual and over 80 years for the firm as a whole in understanding low carbon clean tech commercialization really enables you to price and understand technology risk in those different companies and manage and mitigate it in a very hands-on, powerful way, which, if you don't have that deep sector expertise, you'd never be able to do.
Yeah, it's so interesting. Having also spent time in emerging markets myself, I think that need to improvise and sometimes leapfrog existing technologies, existing ways of doing things. Perhaps the limitations of the infrastructure often force innovation, which is very interesting. And let's turn now to the Clean Growth Fund and carbon limiting technologies in turn. Can you sketch what you're focused on, starting with the Clean Growth Fund?
Yeah, sure. So the Clean Growth Fund is a £101 million venture capital fund. We've invested in 19 companies to date across at the Series A stage. So that's typically an initial ticket size of £0.5 to £3 million across different sectors. So power, buildings, industry, transport, waste and agriculture. And the kind of really key thing is looking for companies, technology innovation companies that can significantly reduce greenhouse gas emissions. So that's what we're looking for. And we have a bottom-up process to estimate and evaluate what kind of significant means and what each product or service that's being developed can actually abate. In Growth Fund, the first one is fully deployed in terms of new investments. So we're doing follow-ons now, and we're in the process of raising Fund 2, which will be 150 million, focused similarly as Fund 1 on companies in the UK that can significantly abate those greenhouse gas emissions across those similar sectors.
And when it comes to then the carbon limiting technologies, you're currently managing partner at the Clean Growth Fund and Chief Executive Officer at Carbon Limiting Technologies. How do they work together?
It's amazing, actually. The focus of both of them is on the intersection of finance, innovation, and clean tech. One provides consultancy services and the other provides investment into entrepreneurial firms. CRT and Clean Growth Fund have a arm's length service relationship, working relationship. So CRT is the venture partner for the Clean Growth Fund. Because clean tech is not a sector, right? It covers many sectors. It's really difficult to have 2 or 3 generalist venture partners that can provide support to all those companies. What they really need is help and support from industry experts. And CRT has over 40 associate members that work for the company, each with over 20 years experience in their chosen domain. So when we have a company in the portfolio that needs somebody who understands transport or buildings, then we can be right in there. CRT can provide that 10, 15 days of service and really get to the nub of the problem quickly, efficiently, and effectively. And of course, it's just not possible for a VC firm to have a whole kind of all 40 experts like that on the books. So this is a really efficient and effective way to provide the right support, hands-on support to the companies in the portfolio to help them overcome those barriers to market entry. CRT also provides deep sector dives or landscape maps. So when we're looking at a particular sector, be it in plastics or cement or carbon capture, they will do a complete deep dive review of where the market's at, what the regulatory issues are, where the innovation is, and what the kind of key differentiators are. And then from that, we can proactively identify companies that we want to talk to with a view to potential investment if everything else checks out. And those dives we typically then put out as blogs or publish in Science in Parliament and other types of articles when we've used them for what we need, because then that helps educate and provide hopefully useful information, out to the sector as a whole.
Very interesting. And then just in terms of the Clean Growth Fund, what type of technologies are out there that excite you today? And I suppose, and just a follow-on question, given the typical profile of venture capital, would this align with the typical profile of venture capital? Do you think there's a different kind of risk reward at stake when it comes to clean growth technologies?
I mean, this is always really exciting to see a new innovation, whatever market space it's in, that has the potential to scale and impact on sustainability and our net zero targets. I just find that hugely exciting, and I've had the privilege and fortune to travel the UK and see many really interesting innovations. I think particularly industrial biotechnology is going to be a huge upcoming area that we will hear much more about going forwards. And that will then help us reduce our reliance on fossil fuels to develop petrochemicals, because that all needs to change. And it's probably the petrochemical sector that's going to be the reason that we take the last barrel of fossil fuel out of the ground. It's not because we need it for cars or aeroplanes. It's because of the 6,000 products that we make with a barrel of oil in our everyday lives. That petchem sector is is going to be the really difficult piece to replace. And so I'm really excited by that industrial biotechnology opportunity. I think phase 2 of carbon capture technologies are really hugely exciting. So I know amine technology works, but really it's far too expensive. It's not a solution for the future. And there's some really interesting and exciting innovation, which will slash the cost of carbon capture and really kind of enable that industry to take off. And then, of course, we have innovations in sectors that are harder to abate, like the built environment and in industry, where we see a huge amount of innovative material science and business models as well, looking at, how can we make our homes more energy efficient. So something I'm currently working on is some salary sacrifice for building retrofit. So the same way you can buy an electric vehicle under a salary sacrifice scheme through your employer, you'd be able to buy energy efficiency products for your home using salary sacrifice. And that would reduce the cost enormously. Of course, the home typically goes up in value by between 6 and 12% when energy efficiency measures are installed. And I find that hugely exciting and motivating project to work on, because it would have such benefit across the UK for everybody. So that's another kind of really exciting area that I just wanted to mention.
We're going to take a short break to hear from one of our sponsors of this series, Eagle Point Credit Management. I sat down with Tom Majewski, founder and managing partner of Eagle Point. I asked him how he thought the client level of understanding of CIO instruments was evolving.
So when we set up Eagle Point in 2012, 9 out of 10 people that we called wouldn't even take our call. That sounds a lot like CDOs and no thank you. I don't think the committee is going to be interested. I don't think the trustees are going to be interested. I'm pleased to report that's probably only 7 out of 10 people won't take our call now. And what that's underpinned by is performance. And we saw how CLOs performed through the financial crisis. 96% of all CLOs issued prior to the financial crisis had a positive return to the equity class, despite unprecedented levels of corporate defaults. Well, we had COVID happen, and indeed the price of loans fell precipitously. I think loans were down even more than stocks in March of 2020, odd as that sounds. But if you were an investor in a 2019 vintage CLO, you've probably had a very good experience overall, in that the CLO structure performed just as it did in 2007, 8, and 9. It worked. There were no forced liquidations. CLOs proved to be a very steady hand, and the ability to reinvest, particularly in dark days, proved to be extraordinarily valuable.
And now back to the show. I love it because it's also innovation in the financing side and kind of paying for this. I think where we need to see innovation there too. And I suppose I'd like to just maybe ask a very big picture question with respect to this technology. And because often the flight, I suppose, of our journey around climate change mitigation is presented in desperate terms and quite dire prognostications. But the offset to this is the technology that we don't even know yet with the innovation cycle. How do you address the ability of this technology to maybe mitigate the changes? And I suppose are we giving it the attention that it deserves? Are we giving it the credit it deserves?
I think, like you say, it's not seen enough. And one of the things I'm really keen to do is share the success stories and show what technology is capable of, so it's much more visible. The huge opportunity. So the reason I set the Clean Growth Fund up was because I could see the huge economic opportunity that we have commercially by bringing some of these new tech to market and really reinventing some supply chains and just ways of doing things is hugely exciting as well as commercially beneficial. As you say, that it can be really far too much doom and gloom, but it is the hope, the new technologies of the future, which make it such an interesting and inspirational area in which to work.
And in terms of the structure that you go about, do you find that it's better to do partnerships? Is there any particular way of approaching these investments that you find is good?
So one of the things I wanted to do was help waterfall more private money into low carbon technologies and innovations. We lead something like 80% of our deals, and we have a real way of co-investing with other investors. So that's really important to us. It's nice to have other investors around the table when you're looking at how do we commercialize these companies. Different people bring different perspectives to a problem or a question, which I think is really key. And it's really good. The more co-investors and partners we have, the more people become more familiar and happier to invest in climate technologies. And I think that's key. We need much more investment, much more money in the space. And if we can help people get comfortable to make those investments, then, that's a huge part of what we like to do.
The second sort of big picture question I had was around some of the pushback against some of the perhaps net zero alliances and initiatives, the voluntary alliances, as well as around some renewable energy. And that mostly comes from the US right now, the pushback. But how would you say it's affecting investor sentiment when it comes to something very specific like the venture capital arena and clean growth?
So I think we're on a trajectory, we're on a journey. And power and transport are kind of already well down the curve. And so there's less kind of issue and challenge there. Long has it been the case that offshore wind and solar, renewables projects are known and understood and a regular investment for infrastructure type investors. Probably harder because the price being driven to get sensible margins out of those projects now, but they've become de-risked and people are reasonably confident to make those investments. Climate technologies is the next step. I think people know and realize that. The question is, how do you do that in a de-risked way? And so that's one of the things that we're helping with, looking and using our experience from commercializing hardware assets in other industries and those investments to bring that learning and understanding to the climate tech sector so that confidence can be felt. There's some of the kind of investor sentiment in terms of GFANs and people pulling out and rowing back isn't helpful. Obviously, I think when we look back upon this in time, we're going to see it as a kind of a blip, a downward blip on a trajectory that already knows where it's going. So really, in any kind of transition, do things go from A to B, straight line, exactly the way you want them to go? Inevitably, there's some deviation off the track. I would say that net zero and reaching net zero we're under a real timeline. And so, as we've seen with the wildfires and so on in Los Angeles, we don't have so much time to get this to a place where, it's manageable. And I think that's the real challenge. So it's upsetting or disappointing when people kind of pull back, but in some senses, it's not total surprise. And, I think things will right themselves again. I think we're going through a kind of a negative or a downward turn, but inevitably that will come back.
That's very hopeful. And I like that analogy of the blip, a trajectory that is otherwise is heading in the same direction. Tied to that, and this is very much related, as often ESG is a conflated set of many issues. And it gets to the theme of this podcast, which is around diversity in the industry. And we have covered on this podcast fundraisers in emerging managers who are perhaps struggling to get access to capital, not getting the attention they deserve, maybe not amplified sufficiently. And similarly, then just the experience of women and other minorities within financial services has not been uniform. Any comments yourself on that, given you've been involved in many industries, both on the industrial side and financial side for many decades?
I think that inevitably the bottom line is that diversity in firms and companies makes better decision making. And so those firms that want to be top quartile will have a diverse workforce, particularly at the senior level. Somebody always told me that things have a way of kind of writing themselves out. And I think, eventually that's what we'll be seeing. That's what will happen. Having been in a male-dominated environment for, my whole career, I think I've learned that it's about showing your quality. It's about showing your value and your worth by doing the job and focusing on doing an excellent job. And that's then the thing that gets noticed. I have been in an environment where they tried positive discrimination. And for me, that wasn't a good experience because I was told more than once that, I was only in the job I was in because of my gender. And, that's not the way that anybody wants to be known, I don't think. You want to be known to be in the role and the position and have the promotion because of what you've achieved and how capable you are, and not for anything else. And so I think to those women out there that are in kind of similar positions, that's the thing to focus on is focus on getting it right every time, putting in that work and effort and producing that, high quality work. And that then will be noticed and rewarded. Very
interesting. And I like that philosophy indeed. Now moving to another area, it's not completely unrelated to the board arena. You've many board roles. Can you talk us through some of those roles you're involved in and what you seek to bring to them?
Yeah, sure. So I'm involved in 2 boards of the portfolio companies that we've invested in as the investor director on those boards. So one of them is Piccolo. Piccolo is a marketplace for trading flexibility on the grid between the demand side and the supply side. And Nuada is a carbon capture company based in Belfast in Northern Ireland. What do I bring to them? I hope I bring a sense of challenge, that challenge and asking those insightful questions is done in a supportive way, which helps the management team of those companies better think about their strategy, their goal, their focus, and importantly, how they're going to get there, what their route to achieving those ambitions are. I feel that sometimes it's a sounding board that, those CEOs and management team C-suite can pick up the phone and ask questions or bounce things off for, some kind of independent thought and insight. And it's really about trying to think maybe about gaps or things they haven't thought about or things they've taken for granted, looking ahead at what might be coming down the line that is maybe kind of just around the corner, because of course they've got their hands in the business every day. So it's that helicopter vision, which is quite important. And also identifying hands-on support work that carbon limiting technologies can help them with to address questions that either they don't have the time and resources to do, or, it's a specialist market piece or needs a specialist sector experience and expertise, which the associates at CLT have and can really get them across a commercialization barrier. So that's kind of on the portfolio side. As you mentioned in your introduction, I'm also an independent member on the government's Net Zero Innovation Board. That brings all the government departments together to look at the net zero objectives and spend. And so we look at making sure the innovation spend for net zero goes towards meeting government's policy objectives. I'm one of 3 independent members, and our role there is that challenge, asking insightful questions, providing a different perspective, and trying to steer that kind of grant spend to a successful outcomes.
Do you think the governance has improved in just thinking about this range of boards you sit on, just in terms of it harnessing the diversity that it's seeking and getting the kind of robust challenge? I would have liked to thought so, but then you see in some technologies, because it becomes the more complex that technology becomes, sometimes the less likely a board is to challenge because they simply don't understand the import of it. Any kind of pressing issues as you see it in governance today?
I think there are probably a number I wanted to mention. I think it's really important that a board has a truly independent chair from a fairly early point, and that chair really spends the time to support the management team, particularly the CEO, really works with the business, uses their networks and contacts to help the business develop, and is there then to talk to the individual investors and stakeholders around the board table to get and to draw out that quality of challenge with the right support, so that it's not all negative challenge and blame, because that just leads to anxiety, but that it's a supportive environment where people can share, this management team can share their issues and challenges and really get some helpful feedback and input into suggestions and things they might be able to go ahead with. So it's not just a reporting mechanism, but it's used to discuss difficult issues that the company's facing and get some steer and direction in solving those things. I think that's some of the kind of really key things. And I don't know if that's new in board governance, probably not, but that best practice, I think, makes a big difference in terms of the company's potential success.
Very interesting. And then just going back to some personal reflections, any highs and lows of your career so far? I think given we've spoken a little bit about the highs and lows for sentiment around this, I'm sure there's something that has been related to that.
I think probably lots, actually. So traveling with Shell was amazing. Working internationally in so many different countries was a really valuable experience to understand where others are coming from and different cultures and different ways of doing things. Raising £101 million for the Clean Growth Fund was, a fantastic, when I finally got to the end of the journey. Doing the journey was quite something else. And there were a certain number of lows where I thought there was no way I was ever going to make it. And then certain of my people that have been advising and supporting me would get a fairly tearful phone call now and again. And then I'd pick myself up and carry on. I think, meeting King Charles and showing him the portfolio companies at a conference in 2023 was fantastic to see just how interested and knowledgeable he was around the net zero and passionate, as we know, around the net zero agenda. That was, a real highlight. There have been many. It's hard to really know kind of which ones to pick out, but there's a few.
Well, definitely the King Charles tour of the companies must have been a very memorable one. Some of the setbacks you mentioned, we don't dwell on them, but were there sort of lessons learned there? And I think anybody involved in venture capital kind of accepts setbacks as part of the journey.
Yeah, I think one of the things I've kind of learned over the time is that people all perform in the right job in the right environment. So we're all good at something. It's about finding that something and figuring out what that is for you, but also the people who work for you. And that's been quite an interesting experience, it's because I've moved jobs quite different, starting in geology and Shell through to corporate venturing, through to Kinetic, which was research and development, organization, which was building that kind of growth story, and then founding a consulting business. So, I've worked with FTSE 100 companies and then tiny companies that I founded myself. And so it's about listening to your heart and understanding what you really enjoy. And that might be in terms of working with people, or that might be in terms of having a head in a spreadsheet, or, whatever it is. I think we spend so much time at work. It's really important to know what that is. I absolutely learned that perseverance and tenacity pays off. And so even when the going gets tough, that's the time to kind of really buckle up and really get on with it. And actually, the good times are so much better and appreciated because of the struggle. So if it was all easy, then there wouldn't be any joy in it. So it's really that struggle. So believe in the goal and keep striving for it, because when you get there, it's absolutely worth it. And it's the challenges and setbacks, right, that teach us the most. What's important is not the challenge itself, but how you deal with it and how you get over it and the attitude and approach to it. And so I think, at a general level, those are some of the key things that I've really learned from setbacks and challenges that I've had.
Well, borrowing from the question about words of wisdom in that answer, but thank you very much. Before we move to that closing question, just wanted to ask you about mentors and key people. I think this is a field full of visionaries. You mentioned perseverance. I think that goes with the territory. It is about making the case and sticking to the case and adapting at the same time to changing technologies and background. Have there been any key people in your career, any mentors or anyone who influenced you particularly along the way?
So maybe a bit of an odd answer, but I think one of the people that had the biggest influence was my mother. She died quite early. I mean, I was, mid-age, but she had that independent thinking. Basically, you don't have to think the same as everybody else. You can and should have your own thoughts and your own views and your own opinions, and you shouldn't be afraid to voice those in the right way. You can do anything you want to do. And she wanted me to have a career partly because she wasn't able to have one herself. And so that strong support, right, from those kind of early years was really helpful in framing my thinking. So I could be the only girl studying mining in the department of the university in Cardiff, even though they called me up and told me that I should try and find another degree to do. But I knew that's what I wanted to do. And so I was able to pursue that because of that strong support behind me.
Not an unusual answer at all, and a beautiful answer. So many of these answers come from family members. So much of our values are rooted in family, and grandmothers actually feature just as much as mothers. So it goes back, and we sow the seed for our attitude and our resilience. Then the last question is any advice for your younger self? I think you have laced this generously with advice throughout the reflection section, but anything that you know now you wish you had known, maybe as that mining student?
Yeah, I think it's good to always help other people, whether you get anything back or in return for it or not. So always do a good turn, or, a helpful introduction, or a piece of knowledge or information that you might have that might be helpful for someone else whenever you can. I think that's really critical and key to building networks, making friends, and having a supportive ecosystem. Because then that's one of the things I find in the net zero community is everyone is really available and happy to help everyone else, because we all know that there's a bigger goal, right? And that really, really helps. I think probably one of the other advice I would have for my younger self is you will become the company you keep. So in terms of the friendship groups and that peer pressure and so on, I think it's helpful to think about that and to look at socializing with all kinds of different people from all kinds of different backgrounds, because it helps kind of become a rounded person with different kind of views and perspectives. And I guess the last thing I would tell my younger self is that things happen for a reason, and the reason might not always be very apparent at the time, and to take that and kind of move on.
Well, thank you so much, Beverley. Plenty of wisdom there. And I want to thank you for your commitment and your perseverance in an area as nascent as clean growth technology. Maybe not as nascent to you, but it is to many investors. It's an area which is perhaps fraught with some fear of the unknown. And I think for you bringing this wealth of experience to bear and the persistence you cite to that. That just makes that hurdle a little bit easier to surmount for many investors. So thank you for the work you're doing in the industry to amplify this and for sharing your insights with us.
My pleasure. Thank you.
I'm Aoife Devitt. Thank you for listening to the 50 Faces podcast. If you liked what you heard and would like to tune in to hear more inspiring investors on their personal journeys, please subscribe on Apple Podcasts or wherever you get your podcasts.
This podcast is for informational purposes only and should not be construed as investment advice, and all views are personal and should not be attributed to the organisations and affiliations of the host or any guest.